Okay, so we are now ready to forecast the balance sheet. And as I alluded to in the last video, a lot of what we're going to do for a balance sheet forecast are going to very much piggyback off the forecast, the operating forecast we've just built. So what I'm going to do here is, just like with the income statement, I've given you some mechanics, right? Down, in this column, there are some mechanics for what to do. And what I'm going to do right now is you have two choices. One is you can just hit the pause button and build these mechanics out, and then we can talk about it. Or you can listen and watch as I go through this, because in addition to mechanics, there's a reason why we're going to do the mechanics we're doing, and I'm going to talk through all of that right now. So again, hit the pause button, do the mechanics, and then come back and listen, or just listen and follow along as I go through it. There's actually less modeling here than there is actual concepts to make sure you grasp. Okay, so the first line, I'm actually going to come back to. It tells you to reference from net change in cash line on the cash flow statement, which is what we're going to work on in just a little bit. But I actually want to skip that and go to the easy part first, which is working capital forecasts. So as you recall, Apple's got a whole bunch of receivables and inventory as well as other current assets. They've also got accounts payable historically. We have to figure out what to do with that next. So typically when you're building a three-statement model, you don't necessarily keep just piggybacking off of research at this point. At this point, you've got enough where you can now make your model flexible so that it's not overly reliant on sell-side research. And what I mean by that is sell-side research is telling you sort of what the key drivers are for revenue, for operating expenses. But then there are these natural relationships between revenue, expenses, and balance sheet items that we actually want to bake into the model. So we're moving away from JP Morgan now. In fact, really, as you'll see, this is really all we rely on for JP Morgan. You can build an entire model with just a few core drivers, and they're driving the rest of it. So let's take a look at what that means.